Hey guys, James here with Waterford Business Solutions. And here at our firm, we try to go above and beyond the typical accounting and accountant relationship where we just handle and do the finances and taxes for you and physically sit down and discuss what the financial statements are saying, what they mean, how they can benefit you, and what you can do. So we wanted to take a little bit of time this week and take a little bit of that uniqueness, at least in my opinion, and explain to you what should you be looking at, even if you're not working with an accounting firm. What should you be kind of looking at on a monthly basis, even a weekly basis, to determine the functionality and the operations of your business, at least from a financial perspective, and how healthy it is. Now, ultimately, the concepts and the things that we're going to discuss in here, it's really an accumulation of a lot of information that we've talked about over the past years throughout our YouTube channel. Our goal here is to share information just like this to help you master and understand your finances and your business's finances. So I do invite you to go ahead, like and subscribe to our YouTube channel here, turn on notifications because we put out videos every single Monday to help you understand things like this and understand how this works and what we can do here. So go ahead, hit that bell icon, turn on notifications, and we'll see you every Monday here just like this so that you can get more information. Now, at the end of the day, every single month, at minimum, you really should be consulting your profit and loss, balance sheet, statement of cash flows, minimum. Those three financial statements make up the core of your business's operations. They help you understand how much money you made or how much you did in sales, where you spent that money, and what your profit was at the end of the day. Then they help you understand what your purchases within the company were and your debt management within the company was, along with where your money went. So a P&L is going over sales and where you spent it. A balance sheet is going over asset acquisition and debt management. And a statement of cash flows is helping you understand where the money is going. All three of those are giving you different information, all of which is super important. You need to understand where your money's going so that you don't spend money that you don't actually have to spend. A lot of times we see clients come to us doing profit first accounting. A statement of cash flows is profit first accounting. Rather than having a separate bank account for each and every thing that you need, a payroll account, a tax account, a savings account for a vehicle, a savings account for hiring a new employee, a statement of cash flows is doing that for you. It's helping you understand, sure, I may have $80,000 in my bank account. I may have increased that balance by $30,000, but I also didn't pay down my AP. I didn't pay down my credit card. I have this much in vehicle debt or loans, etc., that I'm having to pay down. That way, that $80,000, you don't go, oh, there's $80,000 in my bank account, I'm going to spend it. You go, oh, there's $80,000 in my bank account. Where do I have to cover things before I can spend it? That way, we're taking that step first and foremost. That's always the most important first step. The balance sheet helps you understand what asset acquisition you're doing and what debt management you're doing. Again, kind of feeding off of the statement of cash flows. How much in credit card debt do I have? How much in long-term vehicle debt, mortgage debt, etc. do I have? AP debt. When is this stuff coming due? How much do I need to plan on paying every single month so that I can make sure that I've got the funds coming in? We deal with clients time and time again that they take out a loan, but they don't understand the cash flow within their business to make sure that their cash flow can cover paying back that loan, and then they end up in a sticky upside down situation. That's never a good thing. So we want to make sure that we're not just taking out a loan, that we are understanding what our debt payments and what all of that's looking like on a monthly basis. So we look at the balance sheet. And then we look at the P&L statement to understand, hey, this is how much I sold and this is where I spent it. There, you're going to get a lot of your financial KPIs. What's your direct labor metric? What's your indirect labor metric? What's your overhead? What's your material metric? Your credit card or financing fees metric? Your vehicle metrics? All of those that we can take a look at. How much of your money are you spending on these areas? And is it good or is it bad? Are you complying with what are industry standards? Are you above industry standards? Are you below? That way we can make sure that you're cross-checking against competition. But at the same time, we can also review that P&L and be like, hey, my office supplies jumped by $3,000. Why? Oh, well, we bought 2 new computers. Cool. Not a big deal. That's going to happen as long as you can afford it. Let's definitely quantify that. But we're looking at it and we're understanding why things are happening and how it helps you to better your business. And basically, if we're struggling with cash flow, the first thing that we're going to do is we're going to go to the P&L and we're going to say, where can we start cutting these expenses? So we're going to look through there and be like, okay, what subscriptions don't we need? What services don't we need? Or if we're struggling with cash flow, is it because we're underpriced? Is it because we're overstaffed? Is it because we aren't charging enough for where our material costs are now? So we're looking at all of that. And you need to be looking at all 3 of these reports at least quarterly, but I really say monthly, because it helps you make quick shifts in your business's operations. You can even overall look at them weekly. They may not be quite as accurate because payroll, even though you may run it weekly, there's going to be give and take, but especially if you're running bi-weekly payroll, it's not going to be nearly as accurate every single week or things like that. So do kind of keep that in mind, and pay periods may not align. So sometimes we have to look at not just a monthly report, but we have to look at a 3-month report or a 6-month report to see a larger trend. So make sure you're looking at that. If you're seeing a bad trend, is it a bad trend or is it an anomaly? Or is it a situation that we're trending towards, or everything's shifting towards this trend and we've seen multiple months of this occurring? Or is it an anomaly? That's what we're using these financial reportings and why we're analyzing everything. You also need to be going through and looking at doing an AR report, reading your AR report, how many people owe you, because that goes into your sales. When you sell something, you are recognizing that income, but you're not getting the cash. So we also have to review that AR report and make sure that you are getting all that cash. Depending on what bookkeeping software you're using, you need to look at your undeposited funds or payments to deposit report to see what payments you supposedly received and see whether they've actually made it into the bank account. You also need to look at a reconciliation report. What checks have you sent that haven't been cashed? Because if you send a check, it should be cashed within 3 months. If it's not, we need to follow up with whoever you sent that check to and see about voiding a check, doing a stop payment on a check, whatever we need to do in order to reissue. That way you don't end up getting a credit hold put on an account because a check was never received. So you've got to be looking at that too. There's a lot of little things within financial reporting and analysis that you need to look at. And a good accountant, a good CPA, a good bookkeeper, they're going to do a lot of that stuff for you and bring that stuff up to you naturally, but you still need to be the master of your own money. You need to know that this is accurate. Even if they're good, even if you trust them, even if you've been with them for 10 years, it doesn't mean you shouldn't be pulling these checks yourself. We tell our clients this all the time because at the end of the day, we're human. We're going to miss things like this. Now, we try not to because of the multiple different stopgaps and multiple checks that we have in place in-house, but there's still things that I want a client to question. I want a client to say, hey, why is my AR this high? Let's talk about it. Hey, why is my undeposited funds so high? Let's talk about it. Hey, why is my labor metric so high? Let's talk about it. We want you to be active with that, A, because it shows an interest, but B, because it allows you to dissect and understand things way more than if we just said, oh, this is a problem, fix it. Now, ultimately, outside of financial reporting, there's a lot of other things. Sales by truck, sales by employee, things like that. We're going to do a video in future kind of talking about exactly that. So definitely stay tuned for that. But definitely something to keep in mind that we've got financial reporting, but then we have business management reporting too. And while they are both interrelated, there are a difference in kind of the financial things you need to review and the management things you need to review. So definitely keep your eyes out on that, and we'll be hitting on that very soon. Ultimately, at the end of the day, if you're struggling or if you want someone to help you through this, this is exactly what we do here. Give us a call at 864-351-0852 or shoot us an email at info@waterfordbusiness.com, and we'd be happy to walk you through, explain exactly what's going on with everything, and make sure that you're getting all these questions answered on a regular basis as you should be. Otherwise, like I said at the beginning, go ahead, like, subscribe, turn on notifications to our channel. We go over a lot of this information throughout the year. Every single Monday, we're putting out new videos. We're planned through basically the end of the third quarter at this point. Honestly, when this video is coming out, we'll probably be closer to the end of the year so that we can give y'all important information just like this to make proper business decisions.